Welcome back. There are plethora of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio? What are the criteria that you should look at while choosing a fund? We have Nisreen Mamaji, a CFP MoneyWorks Financial Services, to answer all of these questions today for you. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on the Money Show at etnow.tv. Good evening, Nisreen, and welcome to the show. We also have our first viewer online, Shashwati Kannan from Chennai. Hi, good evening.
Hi, good evening. I'm very happy
How are you
that
doing?
My call is fine, thank you. I am Shashwati Kannan's father, Kannan.
Okay.
The phone number is mine, and I have only sent the inquiry for my daughter.
For your
Thank
daughter.
you so much. Happy
All right.
Vinayak Chaturthi to all.
Thank you so much, Mr. Kannan, for sending us your query. And it's very nice that you are thinking about, giving financial protection to your daughter. In fact, you want her to invest. Okay, so we already have your questions. Is there anything else you want to add before I go to Nisreen to answer this query?
The query is absolutely fixed, madam. I have nothing more to ask. She is a beginner, just started earning a lump sum. So I need the advice.
All right. I wanted to understand how much will she be investing, because she needs 50 lakhs for higher education in 2 to 3 years now, right?
Yes.
So the goal is actually not very long term. So we cannot take a lot of risk. So I wanted to understand how much she will be investing.
Acha. Actually, that also I have mentioned in the following message. The thing is, she is planning to go for higher studies. That doesn't mean her target period is only 2 years. It can be, as per the advices.
Okay, got it. But any lump sum amount that she needs 50 lakhs. Any idea how much she'll be investing per month?
Per month, she can go up to 50 to 80,000 rupees, depending on suggestions and target.
All right, 50 to 80. All right, I think we are clear with the question. So I will just move to Nisreen. So Nisreen, very interesting, because also the amount that's needed is 50 lakhs in 2 to 3 years time, and the investment amount is around 50 to 80,000 per month. I think the place where we get stuck is the investment instrument that Shashwati can go for. Considering the kind of short duration, we cannot even recommend something that's very equity oriented, might be very risky for her. How do you suggest she pursue this goal of higher education? Education loan could be a part of this particular goal as well. Would you recommend that, considering the shorter duration time? Sure. Please go on.
Yeah. So basically, she's going to have a shortfall. If she needs about 50 lakhs in 3 years at an assumed growth rate of about 12%, the SIP amount, or the monthly investment amount needed, will be about 1,16,000. And if you're going to put a lump sum, then we need about 35.5 lakhs, at the same rate of expected return. So if her investable surplus is, say, in the range of 50 to 80,000 per month, then there will be a shortfall for which a loan will have to be taken. Also, as far as the instrument is concerned, I think a balanced advantage category for 3 years works very well for her. Typically, the thumb rule for somebody in the younger age group is 100 minus your age. That should be your equity allocation. In this case, the goal is much earlier than the planning allows us for. If that is possible, if you have a longer time frame, then you can always be invested about 75% in equities and say about 25% in fixed income. But here, since the goal is only 3 years away, a balanced advantage category will suit her. This would include about 30 to 35% in direct equities, say 30 to 35% in arbitrage, and the rest in fixed income or bonds, which will give the product a certain amount of, safeguard the planning from volatility, and at least have some kind of return at the end of 3 years. Because without equity, we will not really meet the goal at all. So we can't go 100% into fixed income.
All right, Mr. Kannan, is there anything else you want to ask Nisreen?
Yeah, my That's okay. Well, I'm not particular about 50 lakhs in 2 to 3 years. As I said in the
Okay.
beginning, that's her requirement. But her allocation of funds towards mutual funds or equity, direct equity, or insurance like that, I need to know the percentage
So
from
this,
whatever
Okay, I would recommend
she.
sure,
No, I would
Nisreen,
definitely
yeah.
recommend that you take the mutual fund route. Direct equity might be a bit risky because it's not possible for us to predict the exact stocks that you might need that will give you the required return. So, in mutual funds, that there will be a set of researchers, analysts, and it's a very transparent instrument. So one should definitely take advantage of that. An insurance product, on the other hand, the charges will be very high. Also, all the insurance companies are not doing their in-house investment, activity themselves. So it is better for us to invest with an investment company or an asset management company and let them do the job. And direct equity, I would not recommend to a retail investor because you really won't have the time to select the stocks that could possibly give you the return that you desire.
So via mutual funds, Mr. Kannan, it's recommended that you enter the share market and achieve this goal. And the further diversification across asset classes should be done at a portfolio level. But all the best to Shashwati, and we really hope that she achieve this goal of higher education. We move on. I have Mr. Balupaki from Chandigarh online with me. Hi, good evening. How are you doing today?
Good evening, ma'am. I'm fine. What about you?
I'm doing good. Thank you so much. So we have your question. You started investing 5,000 in Edelweiss Nifty 50 index, and you want to understand if you can continue or you can shift to any other passive fund. And you also want to invest 15,000 monthly in mutual funds, and you want to understand the allocation across market caps. And congratulations, you are just 22 years old, and that's want to begin your investment journey. Are you also reading up and trying to understand the markets, and because of this reason have you selected this fund in which you're already investing?
Yes, ma'am. Yes, ma'am. Actually, I have started like 2 weeks ago. Like I focused on investing my hard-earned salary. So
Okay.
after going through a lot of research, I found that mutual
Sure.
funds will be beneficial and will give good returns in the long term. So that's why I have
Definitely,
shifted to
definitely.
mutual funds.
Congratulations, and very inspirational for all the viewers who also might want to up the same kind of strategy. So Nisreen, what funds for him?
He's asked for an alternative. So I would think the UPI indexed, the 50 index, or as well as the ICICI Prudential Nifty 50 index fund, has given slightly superior returns to the Edelweiss fund. It would have the same benefits in terms of the cost structure because any index fund or an ETF fund would give you the superior return slightly, better than an actively managed fund. But having said that, cost is not the only factor that you would use to select your fund. The actively managed funds, the returns are far better. So of course the costing is higher because there would be active fund management. So I would definitely recommend that you've asked for asset allocation for 15,000 rupees per month, and there I would recommend actively managed funds. So the asset allocation would be about say 1/3 into a multi-cap fund. I've recommended the Nippon India multi-cap. HDFC mid-cap opportunities for about 2,000 rupees, Nippon India small cap for another 2,000 rupees, 1,000 rupees in Kotak equity arbitrage. This will take care of slightly shorter term needs that you might have because sometimes we don't foresee our short term requirements, our emergency funds, loss of jobs, etc. So this could be your emergency fund that you might need. God forbid if there is a loss of job, etc., or a medical emergency in the family. And I've also recommended ICICI Prudential India Opportunity Fund, which is basically an opportunistic kind of fund. It will select the current themes which will do well, and it will automatically change the sectors or the themes every few years. So there I have recommended 5,000 rupees as well. So it's like a 1/3, 1/3, 1/3 breakup. And this is the names of the funds I've already mentioned to you earlier.
All right, that will be all. With that, it's a wrap. Thank you so much, Nasreen, for being on the show and helping our viewers with their mutual fund queries today. Thank you.
Thank you.
On that note, time to sign off. I'm going to leave you with our WhatsApp number and email ID where we keep waiting for your questions, be it mutual fund or anything insurance or even tax related queries. You can send us on our WhatsApp number and email ID. Thank you so much for watching. Goodbye.